Hey folks, it's David Frost, mystrategicforecast.com, and this is the gap trading lesson that I mentioned in a video a couple of days ago that I wanted to put together because here's an opportunity to make some real money, okay? This is something that I haven't talked about before because it's primarily for the intraday traders, folks that can watch stocks during the day and have the opportunity to take a trade, babysit it a little bit, and make sure that they squeeze out all the profit. So this isn't something I discussed before, but it's an opportunity to make a lot of money. Okay, this is a business in and of itself. Let me go through a handful of slides. I'm going to go through a bunch of charts, show you the whole ball of wax, and then I'm going to offer you a way to get my gap trades each and every day. Okay, so just bear with me. This is really good stuff. I'm telling you, this is lucrative, profitable. You're going to love it. So bear with me here for a couple slides while I set the stage, and then we're going to get into the charts. So what is gap trading? This is what I'm going to talk about tonight. What is gap trading? Why does it work? And then I'm going to discuss how it works. Let's move forward and let's just run through the rest of these slides here. What is a gap? I'm sure most of you know, but just in case you didn't, it's very simple. We're not going to make this any more complex than it is. It's simply when a stock opens the day above or below yesterday's closing price. That's it. Don't read anything more into it than that. For our purposes here, I'm going to give you a whole package of a system. Okay, so anything you've read in textbooks and all that nonsense, forget it. All you need to know is what I'm going to tell you here, and you're going to be able to make a ton of money doing it. Watch this. So we're looking for larger gaps. So even 3 or 4% is a little on the short side. I really would like 5 or more % on a gap, and that's specifically for the scalping end of it, but we'll get into all that in a second. But we're looking for larger gaps. We're not just looking for like 6 cents, okay? We're looking for multiple percentage points up or down to move the stock, okay? So why does it work? Why does my system work is the question, okay? Because the way I've laid it out, and I'm going to lay it out, is it's process-driven, it's purely mathematical, and it leaves it unemotional. Therefore, when you enter a trade, you know you're entering a trade at a particular price level, and we're giving it a certain amount of leeway on the downside in case we're wrong, right? Not every one of them works out. We know that. Okay, but in this scenario, a very, very high percentage of the trades, the ones like I'm going to show you, work out. And it's pretty uncanny how this works. This is nothing that I generally talk about, and I've never made a video on this before. So I leave it unemotional because the more unemotional and process-driven it is, the more money you can make because you're taking you out of the equation. So here's the textbook types of gaps that you'll read about or hear about or maybe you know about. They're called common gaps, breakaway gaps, continuation gaps, exhaustion gaps. I'm sure they're all valid, but for our purposes here, we don't care. I'm going to tell you everything you need to know to make money using my system right here. So I have 2 types of gap strategies I use. A quick scalp from a gap up or down at the market open or close to the open, generally speaking. And this is where a stock may open up $2, $3, $4 in one direction or the other. It hits a particular level and then it either backs off if it opened up, or if it opened down, it decides to finally catch some support and it bounces up. And I can find those levels using pure math, okay? Pure math and some other indicators that I'll show you on the charts, okay, that support the case of why that level will work. And then there's a gap retrace, okay? And the gap retrace is where a stock will open up or down, same gap, okay, only about either same day or maybe a week later, a month, a year, whatever it is, it will come back to that level to fill that gap. That instance in and of itself represents a money-making opportunity almost every time. It's uncanny how it works. I'm going to show it to you. And then we have the combo scalp and intraday swing trade, where what I show you is how to quickly scalp a profit from a stock that was moving large at the open, up or down. Okay, we scalp it quickly for maybe 30, 40, 50 cents, maybe more, maybe $1, maybe 80 cents. They're all different. And then I also show you at the same time how to maximize the trade, whether it's within the next hour or for the rest of the day, while reducing your risk to 0. Okay, cannot lose on the trade. All right, that's also a manual that I'm going to give to you. Okay, let's move on from there. This is also in the manual. The process, okay, the process I go through is a daily list. I compile a daily list and I show you where to get these names from. There's various sources, there's multiple sources, but you have to know what you're looking for. We eliminate certain particular types of equities. We don't want low volume stuff. We don't want low price stuff. The reason is because these things get batted around the market very easily. We want the big names. We want stocks that trade a lot of volume. We want stocks that have institutional ownership, because the institutions are the ones that are going to defend stocks when they're down, and they're the ones that continuously keep the stocks liquid enough for us to trade without having to worry about a vacuum on the downside because one seller came in with 10,000 shares. We don't want that to happen, right? So we stay with the larger liquid stocks. I show you how to go about getting the morning scalp opportunities, and then how to maintain a watch list and what to do to that watch list so that you're aware of what's happening when, and that you can focus on the gaps as they're coming closer to actually happening or coming to fruition, okay? So I show you all that stuff. And I show it to you in this manual called the Lazy Gap Trader. We're going to get into the charts in a second. I show it to you in the Lazy Gap Trader, and the reason is because there's so much stuff that if I made a video of just the stuff, it would bore you to death and we wouldn't get to any charts. So what I did was I made the manual. It will go with the video and the charts, and together it's a success package, right? So go over to mystrategicforecast.com/gaps and you'll get that. And here's the best part. When you opt in and you get the manual, I'll email it to you, okay? When I email it to you, you're going to go on a list where you're going to get for 2 weeks my gap trades every single day, okay? You don't have to trade them. Just watch them. See how good the levels are. Not me, it's the levels. See how good the levels are that I identify. I'm going to give you both the retrace gaps that are happening, what I think may be happening, within that day or so. Then I'm going to give you a scalps when they're available. You can trade them or you can not trade them. That's up to you. You do what you want with your own money. All I'm saying is watch the levels, and if you think I'm giving you something of value, after 2 weeks, I'll send you a link. You can pay for a subscription and continue to get the gaps every day if you want. If you don't want, you don't have to do anything. No harm, no foul, no big deal. Let's get into some charts, and then when we're done, go over to mystrategicforecast.com/gaps and get the manual at the very least and get to see the gaps. Get what I'm talking about. You have to see it to believe it. So let's take a look at the first one. The first one is Disney, and the gap is somewhere else. It's not this one. Here it is. Okay. So here's what we're looking at. So here, let me identify the gap with you. So here's the gap, okay? This day, the market closed at 108.75, or Disney closed at 108.75. The following day, it opens all the way up here. Trades higher, trades lower, okay? And then it continues higher, and this is over days. This is an hourly chart, a 60-minute chart, okay? It trades higher, and then it craps out here and comes back down. Now, this is about a week later, all right? So this was on the 1st of May, and this point here is on the 7th of May, okay? So what happens is it comes into this number, and I've put the line, this purple line here is at 108.75 at the exact closing price, which would be the gap fill, okay, from this day here. Now, I put the line in as soon as this happens, and I put it on my watch list, all right? Now, as I see the stock coming back in, I put an order in at 108.75. As I know, we're within minutes. I'm not putting it in a day ahead of time. I'm putting it in within minutes ahead of time, maybe an hour ahead of time, of 108.75. Okay, and what happens? The stock hits 108.75, fills the gap, bounces up, continues higher, and if you held it, you could have gotten well over 110. All the way up here, is well over 110. This is 110 and a quarter. And then it comes back in, but you could have gotten 110 and a quarter. Now, would you have held that long? Probably not. Not if you subscribe to my theory, which is on a bounce, on a stock of $100, okay, you're looking for somewhere around 40 to 50 cents, maybe 60 to 70. You use a little discretion. I describe it more in the Lazy Gap Trader manual. And then what you do from there, I show you how to maximize the profit for the day by taking your risk down to nothing. Okay, so here's a situation where what if you held it and the stock continued higher? What happens if it comes down? Would you lose any money? I explain all that in the manual and how to avoid all those things, how to hold on without taking any risk. Okay, your only risk is when you first enter the trade and how long you want to hold on for that first half. Okay, so let's go over to the next one. So let's just zoom out a little bit first on Disney and take a look at the daily chart and see why this level might have been important, other than the fact that I calculated it using pure math. Okay, I promise you it was purely mathematics. But what happens is you see this pivot high here. Okay, this pivot high was obviously important. You hit it here, you hit it the next day. You hit it here, you failed. You hit it and you finally closed above it and you broke through. Okay, came down to test it again. Okay, and you see whenever a line gets tested multiple times, that price level is important. It's not the line, it's the price level that the line represents. Okay, so I don't determine the price level. The market determines the price level, and this price level was determined very, very meaningful to Disney. So what happens is if I go back to the 60-minute chart and I have those supports and resistance from before, remember, support becomes resistance and resistance becomes support. So I know it's important, and therefore it supports my case when my math tells me 108.75. That's a good number. And all those other items back there on the chart you saw on the daily chart support the case that this gap fill is going to hold and we're going to get a good bounce and we're going to be able to make some money. So what if you were trading 500 shares of Disney, for example, or 200 or 100 or whatever you trade? It doesn't matter. It could be 1,000. And you're only holding it. You could only be holding it for 5 minutes, 10 minutes, 2 minutes, all day. It's all totally up to you. It depends on how quick the bounce comes and so on. So, you can make some nice money because these are found each and every day. Let's go over to another one. eBay. Okay, here's another one. Okay, here's a gap. The gap was at, the close was 58.81. Okay, so I put the line in at 58.81. This was on the 13th of May, and this is on the 20th of May. And what happens about a week later, comes back to fill the gap. We put our order in at 58.81. We bounce up and look what happens. Okay. Now, did you catch all that? Maybe, maybe not. I explain in the Lazy Gap Trader manual how to take advantage of all this upside, okay, by reducing your risk to zero, okay? It's a very, very simple strategy. But look at this. I mean, how good was this level? It was very good. Let's zoom out. Let's see why it might have been so good. Was there anything else about this level? See this pivot high? Okay, see all this congestion here? See this? See this was defended? This was once resistance that became support. You see that? You see what happens when a market chops around a certain level? It becomes important. The market's telling you it's important. Let's look at FireEye. Okay, let's go back to the 60-minute, the hourly chart. FireEye. Here's a gap. The close of the day was 40.36. Okay, what happens? We rocket higher. A few days later, we come back. What was the low? 40.33. What happens after that? We go higher. How much of this would you have gotten? How much money could you have made on that? $40 stock, 500 shares, $20,000 in a day trading account. Where was the high here? $43. Okay, you're in at $40.36. Okay, could you have caught that? Maybe, maybe not. In the manual, I show you how to maximize that. Okay, GoPro. Here's another one. All right, let's reel back the tape a little bit. Okay, here we go. Here's your big gap. Okay, the level was 47.01. Okay, 47.01. GoPro come about a week later. You see a pattern developing there. About a week later, GoPro comes back, fills the gap, pierces through it a little bit, rockets higher. Think you could have made some money in that one? I can show you how. Okay. Here's an important level. So here's the daily chart in GoPro. So 47.01, see how we pierced through it, and it was acted as support here. Okay, support here, broke through it, resistance. Okay, fought it, couldn't hold it, came back. See, this is important again. It's important again. You can see why these gaps make sense. There's a reason why price goes to certain levels. Qualcomm. Let's go to the 60-minute one more time. Okay. Here's a gap. Okay. Here's a gap fill. What is this? A little over a week later. You see the pattern developing. Comes back into the gap. Rockets higher. Okay. Could have caught a lot of that. Could have locked in some profit. Caught a lot of it. Held on to the whole thing. Just scalped a little bit. Anything you want. It's a very, very process-driven unemotional strategy. I don't care what the name is. I don't care what the price is. If it's got a gap and it hasn't come into it yet, the chances of it bouncing are extremely, extremely high when you factor in other things like this. Okay? Is this level important? You see? Resistance, support, support, resistance. Look at this. All this beating on this level. You see? Oh, I moved that level. All right, wherever it was. I moved that. But you can see how that was important. So, the chart or the pattern is telling you, the price levels are telling you those levels are important. Let's look at let's look at one on the short side. I think this is one. Yeah, this was no. Where was that one? Oh no, wait. I want to see the hourly. Yeah. Okay, perfect. So that's the stock. This is Signet Jewelers. The stock gaps lower, okay, and then a few days later we work back up. I think this is a few days later, right? This is the 29th. I think this was the 27th, 28th. 1 day later. Okay, it's the hourly chart. 1 day later, we work back up, pierce through it, fill the gap, fall back away. Okay, your short level was 133.18. Okay, and I show you in the manual how to calculate a stop. How much leeway should you give the stock on the upside? When should you take the scalp off? How do you calculate that? How do you figure based on a $100 stock is obviously different than a $25 stock? I show you all that stuff. Okay, let's look at something different. So that was the gap fills. That was the gap retraces. Let's look at the scalps. Okay, so let's say here you are in the morning. All right, let's go to the daily chart. You're in the morning and you see stocks are moving. Okay, and all of a sudden we've got Borg Warner reports earnings and the stock is gapping down. Oh no, where's it going to go? I want to find a level where I could possibly buy this thing on an opportunity, right? Instead of watching it fall, I want to pay. I know nothing falls in a straight line. I know it's going to catch support at some place. Here's where I can calculate the support level. Probably 7, maybe 8 out of 10 times it's going to hold. 7 or 8 out of 10 times on a big, big gap down. It's purely math. Now watch this. The stock gaps down. All right, let's go to the hourly chart. All right, I got to move back here. Here we go. Okay, look what happens. The stock gaps down. I've got the line in. I've got my order in at 57.61. Okay, that number was calculated before the market opened. Okay, now 57.61, I've got my order. We pierced through it a little bit, well within the reasonable stop loss order, and look what happens. Rocket higher. Now, of course, yes, I picked one that looks really good, but I've got others in here. This is just one that really worked out well, so why not show it to you? It works out well. Okay? Now, did I catch all of this? No. I didn't stick around for all that, but what I did do was I used my little strategy to catch a lot of it, okay, with no risk. It was a fantastic trade, okay? And this all happens within, this all happened within the hour, okay? You got all this within the hour, okay? Even less than an hour, you got a lot of this. So this is an hourly chart, right? So if I went over to the 10-minute chart and I went all the way back to April 30th, all right, we can see what happened. Let's see if I can do it real quick without, no. Here. It's a pain in the neck to go back on the chart. Some reason when the video's running, the chart doesn't act properly. Let's go to another one. GMCR. So GMCR, we want to go to the hourly chart. Okay, this is Green Mountain Coffee. Here we go. Now I want the 60-minute. There we go. Okay. Green Mountain, have a calculated level. Okay, we gap down, work down the rest of the day. This didn't happen right away. Okay, hit the level, and then we bounced. Okay, so, here you go again. The level was at 88.50 over here. You're at 90.84, 90.85, 91. Okay, you see how this works. Okay, I can give you these levels. I can show you the levels. I can email you the levels. You might as well go find out. Look at Yahoo. I'm going to go to the daily chart because this one's dramatic. This is when Yahoo had some kind of announcement after hours of some tax something or other with the Alibaba $8 billion that they have and the tax treatment. I don't know exactly what it was. Doesn't matter. Who cares? What happened was I had the level, 39.97. Okay, 39.97, the stock bounces. Let's look at the hourly if we can get there. Look, there you go. Look at that bounce. Holy cow. So this was... It actually happened after hours, and then it also happened during the session the next day. This was actually the after. No, this was at the close. This was at the close. Either way, had the level, calculated the level. You can have the level too. Whole Foods. Okay, here's Whole Foods. This was the gap, not this down here. Okay, watch this one. All right, 41.45 comes in, pierces through it. Well within our level, our stop loss level, and then we rocket higher. So 41.45, okay, within an hour or so, you're up at $48. Okay, I'm sorry, $43. That's a huge bounce. Okay, does it all happen like that? No, sometimes you just get 25 cents. Sometimes you get 50 cents, 30 cents. You got to know when to take your profit. In the manual, I show you how to do all this. I show you how to take the profit, reduce your risk, and ride it out at the same time. And so that's the story. So here's a copy of the manual. And, I don't want to run through it because I don't want to give everything away that's in it. But, there's a lot of stuff in here. It's a very, very detailed depiction of my process of what I use on a daily basis to find my gap trades. I got to tell you, folks, this is a business. Okay, I do this each and every day for years and years and years. I find most of my intraday trades this way with very, very little emotion attached to it. Come over to mystrategicforecast.com/gaps. Get the manual. Get my gaps for 2 weeks. If you don't like them, that's fine. If you do like them, you'll sign up after the fact. I'm not going to ask you for anything up front, and that's the end of it. So hopefully this was helpful. Hopefully you found it enjoyable, and we'll see you on the other side. So go get the manual. Thanks for listening, folks. Appreciate it. I'm David Frost, mystrategicforecast.com.